How's it going out there? It's December 2nd. I'm Frank Curzio, host of the Wall Street Unplugged podcast, where I break down the headlines and tell you what's really moving these markets. So, I hope all of you had a wonderful Thanksgiving without your families, your brothers, your sisters, or having anyone allowed to come to your home. Since this was mandated by politicians, right? Governors, mayors. I mean, they were adamant about this, too. They were getting on, you better not have big groups, hang out, Thanksgiving. Forget about Thanksgiving. Can't be a real Thanksgiving dinner, right? It can't be you spending time with your family. You got to be worried about coronavirus. And they were getting on TV like crazy, scaring the crap out of everybody. We need to lock down. Have to stay home. Don't go near anyone. All right. Fair enough. That's what you really believe. That's cool. All right. Everybody listened. But of course, it doesn't apply to the mayors and the governors themselves, right? We had Michael Hancock, mayor of Denver, said that everyone in his lovely city should only do virtual gatherings or in-person dinners for Thanksgiving. And then what did he do? He jumped on a plane to Mississippi, spend time with his family, wife and daughter. Mississippi, holy guy with the Mississippi. He's infected. I mean, you would think as a politician, mayor, governor, you're exposed to more people than anyone, right? But yeah, he just said, I'm going to go there. And he got caught. And then what did he do? He did what everyone does when they get caught. He apologized publicly. My fault. My bad. Meantime, you have people who are against it saying, stone the guy, he's crazy. I mean, he spent Thanksgiving with his mom and his daughter, and we're ripping them apart. But more important is we're looking at our politicians, and of course, when they're wrong, they apologize, especially when they're caught red-handed, because that's what everyone does these days, right? Because everyone's so sensitive. No matter what they say, they have to apologize for now. I mean, I don't get that. I mean, actually, I do get it a little bit because it's not really that person. It's they're making a lot of money on a network. I think we saw Herb Street does college football apologize because Michigan wasn't playing Ohio State and the coronavirus. Yeah, come on, apologize again. That's you want to continue to have a job, you got to do that. But everyone's so sensitive. Like, why are you so sensitive today? You can't say anything about offending somebody. I mean, you really can't be yourself then, right? Getting back to Hancock. And getting back to Pelosi or Governor Newsom from California. These are people that scare the crap out of you. And that's if you truly believe that, right? Even though we have a 99.5% survival rate on COVID, you say anything positive about COVID, people want to rip you apart. I did it this week. On Twitter, you guys should go to my Twitter at Frank Curzio. You'll see a different Frank Curzio because let's face it, there's a lot of assholes, right, on Twitter, on social media. They just say whatever they want, have agendas, they're trolls and everything, and I kind of give it to them and have some fun with it. But all I posted on COVID was that the death rate of infected fell below 2%, its lowest level since the pandemic began. That's all I said. I didn't even have an opinion about it. It's a fact. And I had two different people come in, one of them, who's, good guy, say something sarcastic. Oh, wow. So we don't have to worry about these people, the rest of the people dying, whatever. And right away, I called him out. I said, why the F would you mock this? I said, this is a fact that I'm saying. This is good news for everyone that the death rate is going lower, but you're pissed off about that? I really don't get that. But we have these politicians coming on, and believe me, this is going to get to a very important point that's probably going to make you a lot of money in a second. We have our politicians come on TV and just yell at us and say, listen, you have to stay. This is what you have to do. And then we have Pelosi's, Newsom's, Hancock. I mean, I can keep going. I can name, 50 different examples of these people scaring the crap out of everyone and then presenting themselves like they care about you. We care about you. We don't want you to die. And then what do? They do the exact opposite of what they're preaching. Think about that for a minute. So it's one thing. I mean, I always never had a problem with Bernie Sanders because he truly believes socialism is the best way for our country, right? Hopefully, most of you don't believe that. But he truly believes it, and I respect that. That's his opinion, and I respect your opinion. These are people that are saying one thing and doing the exact opposite. This is much different. If you're looking at these politicians and getting onto you and yelling at you to stay home, and then they're having dinners without their masks on, they're mandating, you got to wear a mask, yelling at everybody, ripping everybody apart who doesn't wear a mask, and then you're not doing that. What does that have to be said about our politicians on both sides? Are they saying it because they care about us? No. You really think they care about us? Do you really think our politicians care? No, they care about your vote. Don't think they care about it. They don't care about you personally. Oh, stay safe. No. Do you mind? I think we all know that by now. It's just a funny world that we live in, where people actually trust politicians. And again, Democrats or Republicans, independents. And you know what? That goes right into the heart of one of the biggest trends we're seeing in the market right now. Yes, stocks are going higher and technology is rebounding. And we're seeing, great things at the market, manufacturing activities bouncing back. We had the vaccine, go on and on, right? Positives, positives, positives. The biggest trend by far right now is Bitcoin. You want proof? Just go on CNBC. They have a little ticker on the bottom now for Bitcoin. They always do that when things are at all-time highs. They haven't had Bitcoin on since, I think, 2018. Mid-2018, when the market really crashed. What was it, 20,000 last time, 19,000, and then fell to 3,000 or 4,000 around there? You didn't see it there anymore. Now it's there. Everybody's talking about it. But if we look at the concept and think about what I just told you about the politicians, saying one thing, doing another, forcing us to do things that they don't really believe in. So Bitcoin's now trading, it hit its all-time high. Not too sure where it is today. I mean, based on when you listen to this, it could be 17,000 or 23,000. But it did go over 20,000 for a new all-time high. But if you look at the concept of Bitcoin and when it was created in 2008. Not a coincidence. That was right in the middle of the credit crisis, where greedy bank executives almost destroyed our entire financial system. They used massive amounts of leverage from other people's money to make an insane amount of money for themselves. Knowing that, hey, if we get caught, it's all right. We made a fortune. I mean, you look at Blodgett. Blodgett got fined during the tech bubble. I mean, you know how much money that guy made? He got fined. He got thrown out of the industry for a little while. You know how many people would take that deal? I mean, he probably made like $50 to $100 million. I mean, is that really a punishment? And speaking of punishments, none of these executives got punished. All this craziness went unchecked by our politicians, since they were making a fortune from the lobbies, right? Who were representing the largest banks and financial institutions in the world. They were okay with it at the time. And then when the shit hit the fan, the government, or you and me, our tax dollars actually, bailed them out. Made them 100% whole. Everything's okay now. Not one of these executives were held responsible or did time in jail. I think there's maybe one person out of everybody. Are you kidding me? With the amount of risk they took? And they took it, and they did it behind everybody's back. Nobody knew about it. Even the Fed had no idea AIG was insuring all of this until way into the credit crisis. No idea. And Paulson was like, yeah, AIG, I'm on it. Well, what's going on with AIG? Oh, they're just insuring every single one of these CDOs that are done. How much is that? Probably, trillions and trillions and trillions that are going to be worthless. Oh, we should look at AIG a little bit closer. It's crazy. So now what do we have after that, right? The banks are bigger than they ever were. Our government made an absolute fortune during the credit crisis. An absolute fortune buying AIG, Fannie and Freddie, investing in the banks preferred. Buying this stuff for less than 10 cents on a dollar. Super depressed prices. And what do our politicians do? They use that bill, that TARP bill, to add tons of pork in it for themselves, like for wooden arrows. I covered this like 2 weeks ago. What did that do for us? How many jobs were lost? You must destroy the entire financial system. And your penalty is, well, nothing. Hey, you made a fortune. Good for you. Now you're going to make even more money if you're still in that industry. You wonder why people are pissed and they don't believe in the system and people hate Wall Street. That's it. And that's why I do this podcast. That's why I have Curzio Research, to get you away from the bullshit. I mean, there's great people on Wall Street. There's great firms on Wall Street. It's also an industry that you could easily do the wrong thing and make a lot of money. Across the board, even financial newsletter business. It's crazy. And you go unchecked and there's no punishment. It's, a slap on the wrist. But the lack of trust in the system, I'm talking about the whole system, whether it's voting with this past election. I mean, there's a lot of statistical anomalies. Biden saw fewer votes in every major Democratic county compared to Obama. Every single one, except the 6 battleground states that all stopped counting votes at 10:30 and then started recounting where hundreds of thousands were dumped at 3:30 a.m. Why did that happen? Regardless if you're a Democrat saying, hey, you lost, that's it. So you have half of America that's asking that question and saying, hey, could we just have, why did that happen? Why were Republicans not allowed to be in the room when you were counting this stuff? Why did you stop counting at 10:30? I mean, these questions have to be answered. If you really want to unite the country, which both sides were just tearing each other apart, and, again, if you like Trump, you're racist, you hate women and all this stuff. But afterwards, hey, we got to get the country together, guys. We got to come together. We're all Americans. Really? But it's the system. So whether it's the voting system, whether it's Wall Street, or whether it's our politicians telling us that we need to wear masks at all times, right? At all times, you got to spend Thanksgiving alone, do virtual Thanksgiving, when they do the exact opposite. This favors Bitcoin and also favors gold. And these trends are never going away. They get bigger and bigger and bigger. When you don't trust the system, you want something that you could trust. That's Bitcoin. We see central banks spending money like crazy, like they did during TARP. Now, what's going on? Why is there such a debate right now in the stimulus when we know that we need it? We all need it. Why is there such a debate for an infrastructure bill when both sides, Hillary and Trump, both ran on $1 trillion infrastructure bill? Why didn't we get it done? It's because of all the crap that's included in it. It's because all these states and what they've been doing and how much debt they're in, and how much spending they're in, they want to become whole. They want to make their money back. They want to get paid. This is the stuff that they're not arguing about the stimulus. This is what they're arguing about. Everything else that's going to go in there that you're really not going to see unless you read the 700-800 page report. That's what they're fighting about. And what does that do for sentiment? Well, you don't trust the system. And if you're a Democrat, think back to Hillary, where Hillary, thought she won, and, you're like, there's no way Trump won, or whatever. If you really believe, we have to have a system that everybody believes in. If it doesn't, and we don't, that creates uncertainty. But now we have central banks now, no matter what happens, they're going to bail us out. Now, TARP was incredible. We'd never seen anything. It was $700 billion. It wound up being $480 billion. TARP. To fix the whole financial system. And that money was astronomical. People were like, oh, but that's crazy. It was $6.5 trillion, guys. $6.5 trillion. The government printed and gave direct. And this isn't going to banks to put on their balance sheets to stabilize them so people start spending again and feel comfortable that the banks are going to run out of money. They can go to ATM and take out the money. No. This is a check being handed to people. Of a disease that's probably going to die down incredibly in about a month and a half, not a month and a half, about 6 months or so. Everyone's going to have access to that vaccine, maybe 9 months it takes. There will be people that take it and don't take it, won't go there, whatever. But when you look at all the uncertainty taking place and the people that don't trust the system, and we don't trust the system, that is good for Bitcoin and gold. It's great for them. And I want to start with gold here because Goldman had an interesting report. I'm going to break this down really quick for you guys. So we have our Curzio Research YouTube page. We tape everything now. So this podcast you could watch as we're taping it. I've got to be Daniel in a little while. I got a great guest coming in. It's on video. Also, it allows me to share my screen. So I'm going to explain it to you. So if you listen to this on iTunes, it's cool. I get it. People like to listen to it with a jog and run it. But definitely subscribe to the Curzio Research YouTube page absolutely for free. You're going to see the videos, you're going to see everything, and you're going to see the sites that I use because Goldman came out with a pretty incredible report. I'm going to share my screen here, but I'm going to make sure I break it down that everybody understands. And they came out and said that copper is going 30% higher. okay, did a great job. This is December 1st, and I read the whole report. It was a fantastic report. It really was. It was well done. It's saying that going to 2021, the copper market should face the tightest market conditions in a decade, owing to a substantial deficit. This period would be framed by a robust cyclical and policy-driven demand environment set against already low inventories, a fast-approaching peak of base case mine supply, and a falling dollar. We believe a significantly higher copper price is needed to help balance this structurally tight fundamental backdrop. And if you look at the charts here, in copper, it's kind of amazing how much copper has risen. No one's talking about it. So copper in 2010 was around, it hit $4. And we're looking at, in 2016, it fell to $2. It's been pretty much up and down. And then during the recent pandemic, it fell to about $2 again, $2.10. And 6 months ago, it was about $2.40, $2.50. Now, it's at $3.50. So it's at $3.50, right? $3.47. Why is that a big deal? Well, when we bring it back to the biggest companies in the world, the barracks, the producers, right? The barracks, you have Newmont Mining as well, right? You have all these companies that are producing like crazy. Their average cost to produce is under $1,000 for gold. It's incredible when you think about it. Where are prices now? So when you look at prices are, $1,800 to $1,900. These guys are making money. Again, their production costs all in are less than $1,000. And I want to bring something up for you here, because when you see Barrick's statement here, let me just bring it up. So I have their presentation up. I mean, reducing their debt by 71%, operating cash flow $1.9 billion. These are gold companies, guys. Record free cash flow of more than $1.3 billion. This is Barrick. And then when you look at the average selling price is going to be, for the first 9 months, is under 1,000. And they're producing 3.5 million ounces of gold, which is incredible. But copper is a byproduct of gold. Well, gold is a byproduct of copper, whatever you want. But when you produce gold, you're going to get copper, lead, zinc. It's almost like if you're drilling a hole for natural gas, or if oil, you're going to get natural gas, or vice versa. So you have all this copper, and what these companies do is they all include everything. They call it GEO, gold equivalent ounces. This way, it's one number everybody can understand, and it's cool. No one's talking about copper. Now, if you look at Newmont, 20% of their production is from copper. If you look at Barrick, they're expected to produce, this is just 9 months. I'll bring this back up. 9 months right here. This 338. It's going to be over 400 million pounds of copper they're going to produce. 400 million pounds of copper. Well, we're up $1 in a month and a half in prices. What does that mean? That's 400 million extra dollars. Nobody's talking about that with these gold companies. Not to mention, do you really think gold is going higher or lower? I think it's going to go a lot higher over the next few years as central banks continue to spend like crazy. They weaken fiat currencies. That's not going away anytime soon. So you look at these gold producers, they're trading at a market multiple, 18, 19 times forward earnings. Actually, that's below a market multiple because they're trading over 21 times forward earnings now on the S&P 500. Yet they're growing at 70, 80, 90%. They're growing these earnings. That's compared to what, 5, 4%? That's what's expected at the end of this year. Earnings growing, 4%. And we're looking at 15, 20x greater. They're growing faster. If you take out the Barracks and the Newmonts, if you just took them out and did a screen, you would think these are technology companies with their margins. Their mines, they're profitable. You're looking at 12, 1,300. These guys are making money. It's 1,900. Now you're throwing in copper, which if you look, and I looked at all these presentations, they're not even talking about copper. Newmont doesn't even separate copper. They include it in other, everything other than gold. And most of that's copper. But if you want to boom to companies, if you want to see these balance sheets, you want to see these guys really take off, and these earnings are going to explode. Their margins are going to get greater if gold goes higher. These guys are in perfect position. They're printing money. They're the ones that are printing money, not the government right now, which is incredible. So definitely get exposure to gold. Get exposure to the biggest producers. What are they? Newmont, Barrick, Anglo Gold, Kinross, Newcrest, Equinox. I mean, nobody's talking about copper. That's a major, major move. And Goldman thinks it's going 30% higher, and they made a great case for it. They made a really great case for it. So you're looking at gold as one vehicle with the uncertainty, right? That makes a lot of sense. Now let's talk about Bitcoin real quick. I've been telling you about Bitcoin for at least 4 years. Definitely get exposure. I'm not patting myself in the back. You know, I cover my losers. It's just like, it's much, even more actually, because that's where you learn the most, right? Is from your losing trades. But with Bitcoin surging again, I mean, it's a digital asset in the world where everything is going digital. It's on the blockchain, which the more people that are on it, the more secure it becomes. You have to deal with middlemen, government BS. None of that. None of like government trying to pass a stimulus bill that they know so many people, tens of millions of Americans need, but they won't pass it because they're not getting what they want personally. It's been going on for 3 months now, guys. 3 months. And you all know business owners. Some of them are thriving in this environment, but a lot of them aren't. If you own a gym or own a restaurant, now indoor dining's gone again. Imagine you own like a Dave & Buster's or whatever. I mean, holy cow. Shutting everything down. These people have worked all their lives and they're being told they need to shut down for something that has where the survival rate's 99.5%. How long is that going to happen for? Hopefully not long when we get this vaccine out, but it's pretty crazy. But that filters into gold, it filters into Bitcoin. And more important, when you're looking at Bitcoin, guys, on this run-up, it's not BS. It's not a bunch of, you have a bunch of people touting how great it is and stuff like that. Again, you're always going to have the bulls, perma bears on both sides. And I don't understand why Bitcoin bulls hate gold bugs and gold bugs hate Bitcoin bulls, where they're buying those two asset classes for basically the same reason. I don't know why they hate each other for. It's okay. You can own both. You can own both. And gold's starting to bounce back now. Big moves in those stocks past couple days, 2-3 days after pulling back. And it was like, all that money's going to Bitcoin. It's not. That money's not. You don't have kids who are 25, 24, 23 years old have gold in their account. No, they like Bitcoin. It's not like they have this massive gold position and said, okay, I'm getting out of gold and getting into Bitcoin. No. But if you're looking at this run up compared to last time, I mean, now you have PayPal offering Bitcoin. That's 400 million plus customers. Now have access to buy and sell it. Square, another major platform with small businesses, huge. You have MicroStrategy, publicly traded company that puts some of its cash on its balance sheet in Bitcoin. They did it at 11,000 on average. About 11,000 was 240 million worth. Was it 19, 20,000? Again, it could be 17,000 as I'm speaking. But that's pretty nice. I think it's crazy. Usually that money on a balance sheet, when you have Apple with $200 billion on their balance sheet and all these major technology companies with tens, if not hundreds of billions of cash, usually it's in treasuries or it's in, you have Bitcoin really fluctuates. It's 40% in a couple months? I think in a month it was like 13.5, went to 20 grand. I mean, come on, it's crazy. But you're seeing these companies, you're seeing more people, Coinbase, it's easier to access, it's easier for everyone to have access to Bitcoin, where in 2017, 2018, still, a lot of people didn't know about it. They knew about it. They don't know how to buy it. Now people are buying it. They were interested in it. You got platforms accepting it like crazy. You also have billionaire hedge fund managers. These are very influential people when it comes to influencing institutions and finance. So who are they? Druckenmiller, Paul Tudor Jones, Bill Miller? Those are three pretty old school guys that are now in Bitcoin and saying this is a massive trend. You also have a lot of crazy price targets going up. Winklevoss, 500,000 in 10 years. That could be conservative if Bitcoin actually goes into becomes a currency. That's based on a store of value, their price target. They've been in it a long time, 2013, 14. Good for them. They're everywhere now. BTIG came out with a 50,000 target by the end of this year. It's December 1st. It's 20 grand, 50,000 target. Again, guys going on saying stuff. Just Citigroup analyst came out. Was it 300,000 by the end of next year? How about 100,000? It's 20,000. Again, getting your name on TV, but when you're looking at bigger firms covering this, hedge funds, big hedge fund managers talking about it, major companies with cash on their balance sheet going into Bitcoin. More important, PayPal, Square. These are major payment platforms that are offering Bitcoin now. It's different this time, and it's just the beginning. Digital assets are in their infancy. It's not even the first inning yet. You know what? That brings me to my interview. It's a first-time guest, very popular guy, at least in the digital asset world. His name is Stephane De Baets. He's the founder and president of Elevated Partners. It's a company leading a digital asset revolution in real estate. So real estate and debt are two markets where you're going to see security tokens absolutely take off in the tokenization of this. Because if you look at the bond market and the fees that investment banks charge, and the only game in town, they want to get away from that. Just like for me, when I brought my CEO token public, you have an equity stake in our business and we're paying a dividend. And we paid a dividend. We intend on paying a dividend going forward, which if you're a holder, you're going to receive a dividend payment very shortly. But it's an easier way. It's less costly for me. It's easier for people, everyday people, to get into these businesses in their early stages of growth instead of getting an Airbnb at a $31 billion valuation, which was valued at $18 billion. I'll get to that later on, pre-COVID, but it's worth more now, right? Which doesn't make sense. But again, that's going to come out. It's going to fly higher and stuff like that in the IPO. But if you're looking at the digital asset revolution, okay, Elevated Partners, right in the middle, one of the biggest names. They have over $1 billion in real estate assets all over the world, including the United States, Southeast Asia, Europe. And they launched their first security token called the Aspen Digital Token. They launched it this year, which is trading on the T0 platform. One of the biggest platforms. It's someone I interviewed, the president. Saw him, great guy. He's on about 2-3 weeks ago, I think. So they're trading on the T0 platform. But Stephane is a pioneer, and he's a pioneer in many industries. He has over 2 decades of experience in asset management, financial structuring. Again, one of the biggest names you'll find in the security token industry. So you know how I feel about it, right? This industry tokenization of trillions in assets, which I think is inevitable. This makes sense. But I want you to hear from him because he has stake in the game just like me. He's been around the block in terms of investment banking, Wall Street financing, just like me. And he's a straight shooter, just like me. So it's a great conversation. Really great interview. And you know what? Let's get to that right now. Stephane, thanks so much for joining us on Wall Street Unplugged.
Thank you, Frank. So happy to be here.
Well, truly an honor because you're a pioneer in the security token industry. And let's start there. Through your firm, Elevated Returns, you launched a major commercial real estate transaction under blockchain technology, and that was the Aspen St. Regis token. And what made you go that route? Because when you're looking at that luxury hotel, I believe it's like 180 room, beautiful hotel. I think you could have went the IPO route or different routes. What made you do it through the security token route?
All right. Wonderful question. In fact, we tried the IPO round and we failed. Mm-hmm. We failed for 2 reasons. I think that the days of the legacy stock markets are counted. People want for something different. So if you look at the big companies on the New York Stock Exchange, you really have it's changed recently, but mainly you have big companies and the trading is dominated by institutional trader or high frequency trader. So if you're a small, tiny company, this is not the most viable way to raise capital. Secondly, I really do believe that everywhere you look today, whether it's on the currency front, on the political front, people are looking for disruption. I think people had enough with the old institution. They feel somewhat cheated, or they feel that these institutions are no longer giving them what they need. They want to be able to make their own decision. And truly, this is what the blockchain and crypto movement is doing. So we are looking at the future. We don't look at the past. We believe that access to great investment should be democratized. And we think that tapping into the blockchain community was the right way to do.
You said a couple of interesting things there, because I saw you quote one of your quotes where you say, secure tokenization, security tokens allow for the democratization of the investment process. Could you go into that a little bit more? Because in terms of not having a middleman, because I think some people, we know the utility token space, right? Where, a lot of these kids have raised money. It's a utility token. You don't get an equity stake. It's totally different from security tokens. But I don't want this to be an industry, because I get a lot of calls. I'm sure you get a lot of calls now that we launch a CEO token of people trying to raise money very easily. But this isn't something like that. You're talking about the democratization of the whole process, right? That's why people should be launching security tokens.
That's right. If you look at owning trophy property today, right? If you're going to buy a hotel, most likely you're going to have to buy the entire hotel. Mm-hmm. So if you say trophy hotel trade in the 250 to 500 million range, that really narrow down the universe of people that can actually enjoy ownership of a trophy property. And also then you have really normally the binary nature of holding real estate, which means you either own it or you don't. There's never been a process where you can say, I can buy a little bit of it, I can add to my position, or I can sell some of it if I need some urgent liquidity. I think that what security token do is, by creating a market for those private investment, if you want, you give basically a whole new universe of opportunity to Joe on the street. And I think that this is what the future is going to be. If you come and ski in Aspen year after year, and now you know that you can actually own a piece of the hotel where you stay, you can get a cashback rebate as an owner. You have all the other perks that we've created in our owner benefit program. You're like, this is pretty cool. And guess what? Because you're also tied up to real estate, you hedge against inflation, and you're probably looking very good 10, 20 years from now when you're going to pass on your token to your daughter and sons. So I think this is what we call by democratization, is go and pick what you want, get exposure to it, as simple as 3 clicks away.
Now, talk a little bit more about those perks, because I think people don't realize that. First of all, your token trades on T0, one of the largest, if not the largest, security token digital platform, I should say, not exchange. It does have liquidity. I know you're happy with that decision, and it's available to mom and pop investors, right? So what if someone goes to T0 or they go to Dinosaur Financial, whatever they have to do to get their account set up? Can anyone buy your token, and what are some of the benefits they get? Because, we're not just talking about equity, potential dividend. There's more benefits, right?
That's right. So it's as simple as I say, as 3 clicks away. You open an account, you fund your account, and then you purchase. Anyone can do it. There's no restriction, and there's no minimum amount. Secondly, you are completely correct, Frank. We wanted to take the concept of ownership beyond just being an equity holder and receiving financial dividend. We want to create the perception and the recognition of being a true owners. So we've established different level of ownership based on how many tokens you own. And when you come on property, we have like super cool partnership with the coolest brand. And you receive a VIP amenity. You receive a sports car for a test drive. You receive a cash back on your stay from 20% up to 50%. And we really mean it when we say we treat token holders as owners. So you feel like you're an owner. And I tell you, it's super cool.
It is super cool when you think about it. Now, you are known as a pioneer. You started the Chefs Club, which is amazing. I read a lot about that, rotating cast of nearly 200 chefs for around the world, which is really cool. When you look at security tokens, how does this compare to some of the other things that you were pioneering in terms of maybe the upside potential, where you think this could actually go?
Let's put it this way. I mean, Chef Club is a great concept and we're super proud. We are probably too early, but I think in the post-COVID world, everyone's going to go the Chef Club way, because I don't think there's a single chef around that wants to invest in a 15-year investment when you realize it can be taken away from you overnight. But coming back to security token, there's a couple of things that I would like to say here. First, this is just changing a technology that power existing investment. So we are not inventing anything. We're just applying technology to make it easier for people to access. Once you understand that, it is not an if, it's a when and how. So I've never been as convinced in any of my projects from an entrepreneurial point of view that 5 years from now, most investment will be digitized. And 5 years from now, everyone's going to have a wallet, a digital wallet on their phone, and they're going to have access to their own wealth instruments at their fingertip.
Well, I want to make it clear too, because you're not someone where we see on CNBC or Fox where they're talking about a certain trend is going to be. I mean, you're fully engulfed in this, not just the Aspen token, and I'm engulfed in it, not just our CEO Curzio Equity Owners token. But I read that you have around $1 billion in real estate, and if I read it correctly, you plan to digitalize that entire portfolio.
Yeah, I mean, we're very fortunate because as a group we have great partners and partnership and alliance. And if you add all the universe of ownership today, it's actually way beyond $1 billion. And guess what? These people joined us in the ecosystem because they are fully convinced that that's the answer to their own challenge in their own industry. So I can tell you, whether you look in Asia or you look at here, the people that are really holding the bag, if you want, they're already making move into digitization of their investment product. And you've seen that even in the banking world. I mean, JP Morgan was very famous to say Bitcoin is a scam. And guess what? You had the JP Morgan coin, and I've read some research saying it's probably going to go to 140,000. It's always the same name of the game is if you see a trend, you're going to let crazy Wild West type of people making the first move. But if and when you understand that there is no doubt that this is going the direction, you're going to see the big player joining basically the trend. And this is, I think, what's happening right now.
Well, you mentioned Bitcoin, and we've seen it at an all-time high now. Do you think this is, for me, I personally think it's good news, but when do you see our industry? One, I guess I would ask you, you think this is a good thing for security tokens? And two, when do you see this industry getting adopted like Bitcoin is, where you could buy it on PayPal, Square now, Coinbase? It's very easy. 3 years ago, people were like, what is this? I'm not too sure. Now you see it everywhere, and it's very easy for people to buy. It's not hard. Your computer, like you said, you held up your phone. Where do you see this, or what time frame where people really understand our industry like that?
Well, there's going to be a couple that's a fantastic question, by the way, because it's really key. The question is how fast will the adoption be, and what are the triggers that we're looking for to see the first key portion of adoption. So one is going to be size, the size of the deal coming out there and the type of players. You need to understand that for a market to be liquid, you need to have a certain amount of supply and demand. So the size of the deal, of the good deal hitting the market, is going to be a key component. Secondly is regulation. We are still stuck in the 1933 Securities Act. And guess what? Most countries in Asia, and we are developing a lot in Asia, have understood that in a digital world, you need to change the rules. I personally believe that the SEC in the US are completely aware of that, but they are just very careful at putting a line in the sand, because once you accept one precedent, you're going to have to make sure that everybody use the new rule in a good way. So I think regulation is going to move towards acceptance of digital investment product. So you have size, you have quality of deal, you have regulation. But as you mentioned, at the end of the day, it's the demand of the people. If people are going to start saying, I want this, can you do this? At the end of the day, the market will adopt the demand. So my prediction is you're going to see the market probably moving faster in another portion of the world, most likely Asia. And this is why we have huge investment in Asia, and we're going to launch many, many tokens there. But then regulator in the US is going to look and say, oh my God, what's happening in Singapore, Thailand? What shall we learn from it? And then you're going to have a back integration of regulation in the US. That's my prediction.
How important is it, because we have a new SEC chair coming in, that they are familiar with this industry? Because, yeah, I mean, maybe I could ask you this, what have you learned, or what has happened over the past 12 months that you didn't know maybe 24 to 36 months ago? And I think a lot of that might be on the compliance side, but I think that's kind of important, right? With the new SEC chairman coming in and really getting the rules in place, because everything seems so vague in the US. And you talked about, Asia and Southeast Asia, but I guess, what have you seen over the past 12 months or even 6 months that has you that confident that, hey, you know what, we're going to get over this speed bump. There's going to be more transparency. And that, of course, is going to make it easier because people are going to be safer investing in this industry.
Well, I think that the key difference, and we have to go back to Bitcoin, whether you like it or you don't. I'm not a big fan. I believe in the gold standards. I believe that any form of instrument should have some form of economically viable collateral to it. If it's just based on perception, it's great, but I think it has its own limit. But I love what's happening in Bitcoin right now because it's an institutional drive of new flow into Bitcoin. And I think that once you have like the cyberpunk and the hackers moving something, then it's easy to make the argument and say, listen, that's a scam. But once you have Guggenheim partner, once you have the big names in institutional investing that start allocating portion of their wealth into Bitcoin, then as the SEC, it's very difficult to go back and say that's a Ponzi scheme, because again, it's market driven. So I would say the institutionalization of the trend into blockchain-based product is what has fundamentally changed. And I think it's good. And, I saw last week that there was some gossips about whether or not there's going to be higher scrutiny on self-custody wallets. And some people cry, oh, that's the end of it. I think this is great because guess what? If the only reason this industry exists is because we're going to bypass, anti-money laundering regulation, then we should not exist. Exactly. I think we should embrace transparency. I think that the key revolution is not that you try to avoid tax. The key revolution is that you are owner of your own wealth and you can make your own decision and you don't need to feed the intermediation chain that exists today in the financial world.
You made an interesting point before too about, tokenization of real estate. You're highly connected in the real estate industry. We just talked about that. How big is the real estate industry on a whole that you think, because you said eventually you think all of these assets will become digitalized. I mean, that's a bold statement considering how big the real estate industry is.
Well, I mean, Frank, here is our thought, right? What the Bitcoin rally does teach us is people are looking for alternative to fiat money, right? Mm-hmm. So you say, if you're going to print it, if it's worth as much as toilet paper, why do I own it, right? So people are looking for alternative, and today Bitcoin is the most liquid alternative. But what if tomorrow you're going to have a Bitcoin which is collateralized by a pool of global real estate? Then what do you have? You have an underlying economically generating income pool of assets that back up something which is also has the quality of Bitcoin, which is scarcity, which is easy transferable, and which is global and not at the fingertips of the current corrupted central banks. So I think that you have all the positive of Bitcoin, but you also have something that gives you a safety net on the downside. So the size, if you look at all commercial real estate and agricultural land, you're looking at 70 trillion. And guess what? The government will love it. Do you know why? Because it will help reflating the balance sheet of government-owned institutions and banks. So if you actually if you look at real estate, not I own real estate because I need a home and a roof above my head, but real estate is an income, and real estate serves as collateral for a monetary instrument. Then guess what? Maybe valuation of real estate should be think in a different light, and maybe you have plenty of upside in real estate. And that's going to reflect balance sheet, and this is what the world needs. total debt is too big. Central bank are trying to reflate. They're just using the wrong tool. They're basically debasing the money. And what the market is saying right now, they're saying, we don't want that. We want alternatives. So I think that we're only scratching the tip of an iceberg. I think central bank will basically disappear, or their role will be vastly changed in the very near future. And we're going to see alternative privately owned currencies.
70 trillion, that's a big number. That's just real estate. I mean, ours, we have a corporation that there's, any asset could be tokenized, but let's stay on real estate just for one more second, because I think you're a pretty highly connected guy in the real estate industry. So what are you hearing? Because I can see even in your excitement as we're doing this interview, watching on video, where do you see or what are you hearing out there from people? Because I know you're probably associated with so many other people. Now that you launched your Aspen token, is your phone ringing off the hook? Are people asking more questions? Are you seeing that from people who weren't really familiar in the industry, especially in your line of work in real estate?
That's right. I think everybody try to understand what the potential and the possibilities are. They also try to understand the challenges, and the challenges are twofold today. One is, how do you make the market liquid? And I think with people like you helping preaching basically the potential, and people can really understand what it is, then I think it's going to help. And people are also trying to understand, how do we tweak the current instrument to make it more palatable? So you have a drive from regulatory and using lawyers to lobby basically the authorities, and then you have a discovery. But as I mentioned to you, what's going to happen? It's every day you convince another person, and people looked at it, and it's not going to be, I don't think it's a flash in the pan. I think it's a long-term trend, and it's all about being a pioneering. You need to go on a mission, you need to go on a crusade, and every day you convert somebody new. But I can tell you a couple of things. Most of the real guys in this industry, they're all looking at it. Certainly most of them are talking to me, and they try to understand. And soon, my prediction is you're going to see a very, very big name doing a major tokenization of a big pool portfolio.
No, that's great news. And maybe talk a little bit more about the institutions, because even when you look at Uber, I always look at Uber as I looked in this industry, where if you take an Uber, it just makes sense. I mean, from every single level, it makes sense. You'd probably never take a taxi again. It's cheaper. It's safer. You can call a person, everything. And it just checks off every box. Everything that bothers you about taking a taxi, it's checked off every box. This is the same thing here. But what we saw with Uber, taxis didn't want to adopt it. We saw cities didn't want to adopt it. Now this disruption is occurring in an industry that's a boys club, right? We're looking at these big institutions, Goldman Sachs, Morgan Stanley's. This is, dancing on their turf, basically. Do you think that's going to prevent this from scaling, or is it going to get to a point where they're very smart, those guys over there, even though some people don't like them? They're going to say, all right, this is inevitable. We need to get in it now.
Yeah, I think what's going to happen, if you look at, I'm going to drop a couple of names here. If you look at what's happening in the leverage, basically crypto market, you have great institution companies like BlockFi that give you leverage against your crypto assets. You look at who are subscribing to their private round of capitalization. These are people like Morgan Creek, Sequoia, largest banks in Asia. So the big boys, like you say, the Goldman Sachs, the JP Morgan, they have their own VC arm that are already seeding those companies. I don't think they want to do the transformation from within, because you're going to have hundreds of bankers that's going to say, hey, you're killing effectively my job. I've been selling REIT for the last 20 years. And if this goes off, but what they do, they go on the sideline, they seed those companies. And then the size will be to the point that it becomes cool to raise your hand and say, I'm actually backing this trend. So we are probably in this foundation infrastructure building where 5 years ago, it was totally uncool. If you associated an institution and name with the name crypto or blockchain in the same sentence, you are basically branded as a drug addict. Today, it's kind of, what if you're right? 5 years from now, it's like, if you don't do it, you're basically a dinosaur and people won't even look at you.
Yeah. And I guess the last question here, because you mentioned earlier how you have real estate all over the world, especially Southeast Asia and Europe. Is it easier on the regulatory front to establish security tokens there? Of course, the U.S. is a market you want to be at. It's huge. It could be incredibly liquid if, we just ease up on the regulation a little bit and do the right thing here. But are you seeing this trend globally right now and we're slow in the U.S., or is it kind of like everyone's kind of starting to adopt this at a slow pace and you think it's going to get bigger around the world?
Well, I mean, it's like everything, right? If you look at internet banking in a country like Thailand, you have 84% penetration of internet banking. If you're looking at internet banking in the US, I think you're in the mid-30s. So what you're doing is, when you look at growing countries, growing economies, they embrace innovation because they see this as an opportunity to jump the ladder. Countries that have their marketplace firmly established, they're under the threat of the big lobbies that say don't change the rule because that's going to create competition. So I think what you're going to see growing economies, emerging market moving probably 10 times the speed that the mature market's going to move on. And then you're going to see the in-betweeners, people like Switzerland, countries like Switzerland, Netherlands, Germany, that are mature economies, but always looking for innovation. So I would say probably if we had to rank the speed of adoption, Asia is going to be first, Europe second, and unless I'm missing something, the US will trail behind for the next 2 to 3 years.
No, that's great. And you're in Denver, Colorado. St. Regis is there. I guess, hopefully you're going to be going skiing pretty soon if you haven't gone this week or next week. But what are you seeing in terms of trends for the hotel? Because we know the hotel industry has not been that good. But from what I see, even in casinos, if you look at a travel, the bookings are huge going forward. Everyone's dying to get out of their houses. I was just curious to see in your neck of the woods, are people, we have the lockdowns now. We have great news coming out with the vaccine, but it seems like this thing's going to open up tremendously. I would think it's very good for that asset that you have at St. Regis.
Well, I mean, what we've learned is, I think that I don't have a crystal ball, and I'm not claiming to be a scientist, but I can look at data. Is living in the big cities is probably less and less appealing than moving to places where you actually enjoy your quality of life. And certainly the people that have to stay in the cities, as soon as you let them take a few days, they coming to places like Aspen. We see plenty of actually people even driving from California, from Texas, because they want to be here. It's beautiful, it's open air, people are compliant, and you have very, very low incidence of COVID cases. I don't know if it has to do with the altitude, but it's beautiful. So I think that resort hospitality is doing extremely well. Unfortunately, big conference hotel in big cities, I think there's going to be more pain.
That's great. Well, Stephane, we'll leave it there. I just want to say thank you so much for doing this interview. I know how busy you are. It's a big deal to my subscribers because, as you know, we have a Curzio Equity Owners Token. We only like to get people on here who really, truly believe in this industry, who have stake in the game. And, I really appreciate you coming on, explaining everything to our audience.
Thank you, Frank. Thank you for having me, and happy holidays already.
Happy holidays. Great. Talk to you soon.
Bye now.
Hey, guys. Great stuff from Stephane. Check out Curzio Research YouTube page. Subscribe to it. Like it. You're going to see that video. You're going to see everything that I covered so far. It's really cool that we're taping this. And it is resulting in more and more people coming to our platform. It is really cool. I don't know what it is, but people just like to watch podcasts, including me. I mean, so, you listen to them, but I just find myself when I'm flipping through the channels and I see, a guy with a microphone headset on. It's just, I'm watching that. And I don't know if it's the expressions that you see or how he's talking about things, but it's just really cool and provides another element. And, everything's going digital. Everything's going digital in terms of tokens, but everything's going, video as well. And we're right in the middle of that trend and have the studio set up. And it's just really, really cool stuff, guys. Really great stuff. So a lot of stuff going on this week. And I want to actually thank Stephane for coming on. Again, I've interviewed incredible people in this industry over the past month, founders and CEOs. Again, you can find some of that at Curzio Research YouTube page and just the podcast. these people are coming to us. We're talking to them. We have relationships. These aren't like with employees, but just being engulfed in this industry is incredible. So guys, pay close attention to these interviews. Listen to what they're saying, because if we all happen to be right on this industry, there's a very strong possibility that many of us could see life-changing returns by investing in the right areas in this incredible trend. Okay, I've covered trends my whole entire career. I've got so many people. You follow me for the last 20 years. I've gotten in so many trends early on before anyone knew what cloud was, for anyone who was data analysis. Just you go down the line in 5G, talking about 5G 3-4 years ago, going to Consumer Electronics Show every single year, identifying those trends where all the biggest technology companies, thousands of them, show their latest technology they're going to release for that whole year. I go in January, we're going for, I think it's 8-9 years. This trend is, I mean, one of the biggest, and it just makes sense, like Stephane said. So again, you're going to hear a lot more stuff about security tokens, tokenization. It's not going to be a tokenization podcast or anything like that. But if I do find a great interview, someone that can help you understand this industry and make money off of it, I am going to interview them. And if you have anyone out there, just let me know, frankcurzioresearch.com, that you want me to interview. Again, this podcast is about you, not about me. So let me know if you would like to hear any of those guests on the Wall Street Unplugged podcast. So a lot going on this week, and I want to bring in my buddy, Daniel Creech. Let's go, man.
Frank, what's happening? Happy Wednesday, sir.
So, I was going to name this segment and say things I hated this week, because I get annoyed at a lot of stuff, and so do you. And when I come in the office, you're here, we're talking, and we're just like, did you see this? Did you see that? This is crazy. It seems like most of the things we're kind of pissed off at, so I want to name things that I hated this week, but I don't hate everything, but there are a lot of things that we were talking about. I'll let you go first. There's some of the things that maybe you hated, you didn't like this week, but there's a lot of news out there that really bothered me.
Yeah. George Strait has a good song called I Hate Everything. That's a good plug for him. One of his 50 or 60 number ones. Non-topic related. You know what? When you asked me about that, I was thinking about this yesterday when you were venting a little bit. You know what I can't stand is when you meet somebody through an acquaintance. Like, let's say you're at a bar. Okay. Mm-hmm. So I kill a lot of time. I go to a bar, have a drink, unwind. And you meet somebody through somebody or whatever. And at the end, you just say, good talking to you, whatever, good bullshitting with you. Thanks for, and they say, yeah, likewise. I have to admit, I have no idea why, but that goes through me like a knife. Like, likewise, what the hell does that mean? Like, if you are a person that uses, and now a lot of my friends, they know this, so they always, hey, Creech, likewise. But I honestly don't know that. It bugs the hell out of me. I'll be honest with you. So, thought about that. That's one thing off topic. Getting back on topic, I will circle back to politics, Frank. You know what upsets me is that people, and you're guilty of this, but you do it the right way. Because around Thanksgiving and Christmas, you always tell people, hey, enjoy time with your family. Don't talk politics. Have a beer, relax, and all that. Yeah, that's fine. Outside of that, people should talk politics more and all the time. And the reason for that being is because if people just cower away, you are in a situation like what we have now. So my encouragement to everybody is it's okay to agree to disagree. When I argue and have fun, and I've had a lot of good conversation with some friends here just in the last couple of weeks, especially post while we await election results. My whole thing is, hey, I don't want to change anybody's mind per se. It's not my goal to talk about something and get you to be like, oh, well, you're right and I'm wrong. No, my whole goal is to say, hey, at least you understand where and why I believe what I do. If you agree to disagree, that's fine. Let's move on. But this whole, you can't talk about this, you can't talk about that. It's just more of this nanny state that's being pulled forward because of the coronavirus and lockdowns and all that. And by the way, you sounded a little fired up. Did you go off on lockdowns or anything fun today?
Yes. Yeah, nice. I did a little bit. It's just, you know what? I love how the politicians just go on TV and pretend that they care about you. We care about you. You need to stay home. Don't go visit your family. You got to wear masks, and none of them do it. Right? So it's like, come on, man. It's so things like that really tick me off, which is, again.
Who I think has to be having a lot of fun? I got to interrupt you on politics. Did you see what, how do you say the governor here? DeSantis? Is that how you say it?
Governor DeSantis?
Yeah. Okay. Did you see that he was talking about lockdowns and closing schools down? Did you see who he compared him to?
No.
So I still think Trump's having the time of his life because he's a drama queen and he's got more drama than he can deal with and he gets to fight all day. The other guy that has to be having a blast is our governor down here in Florida. He says, quote, people who advocate closing schools for virus mitigation are effective today as flat earthers. Can you imagine if you're a lockdown, anti-school, scared to death because of the media and conditions you're in, could you imagine hearing that? You talk about boiling points. Anyway, that cracked me up. I thought that was hilarious. That's going to piss a lot of people
what did he
off.
say about the looters and the whole Antifa and
oh yeah, they're
the
trying
riots,
to.
and then he came out and said
it's an extension of stand your ground laws, right?
Yeah, so basically you're allowed to shoot looters and stuff. Like,
Yeah.
You don't mess around with Florida guns. You never want to get out of your car and argue with someone in New York. You yell at people and stuff like that out your window. You don't want to do that in Florida. It's pretty crazy. Everybody has a gun here.
They're crazy.
To that.
So anyway, I got you off topic, but anyway, that was funny. So back to the lockdowns and all that kind of stuff. You were having fun with politicians, rules for thee but not for me types.
Yeah, no, definitely. I'd tell you one of the things that really, really, really pissed me off. I'm sorry to say it that way, but really ticked me off is, the Nasdaq's president CEO, she came out, and this was, I think on Monday or Tuesday, excuse me, said, her name's Adina Freeman. She said, Nasdaq has asked the Securities Exchange Commission to approve new listing rules that will compel the companies on its stock exchange to regularly report on the diversity of their boards and require that they have at least one female director and a member of an underrepresented minority. So basically, you have to have one woman as board of directors, which, again, hear me out here, because I know, people are going to jump to conclusions.
Frank's a sexist.
Exactly, man. It's crazy. It's unbelievable. Me and my wife and 2 daughters. Yes. But I wonder if Adina really thinks that she's helping women by doing this. Daniel, I think what she's really doing is hurting them, but she just doesn't see it. So what is she actually saying? She's saying that even if you do not deserve the position, you should get it because you're a woman. Think about that, how ludicrous it is. Imagine if NBA commissioner, right, Adam Silver came out and said, we need more diversity in basketball teams. So going forward, every organization must have at least one white person on its team. He'd be fired in 2 seconds, right? If he said that, he'd be fired in 2 seconds. Absolutely. He's gone. Now, before you jump to conclusions, let me be clear. We have 4 partners at Curzio Research, 50% are women. Outside of being the founder CEO, which I am, the next biggest position at my company's publisher, Veronica Charette, is our publisher. She's amazing. I have more women working at my company than men. Why? Not because I wanted to say, hey, we're a diverse company. Look at us here, right? This is great. Not because it's mandated. It's because every one of them earned that position. They busted their ass. I hired them because they're the most qualified person, and I didn't look at gender, color, or race. And when she came out and said this, I noticed on the financial media channels, they were celebrating this. And I'm like, if I was a woman, that would really piss me off. Like, you're saying that even though I'm not as qualified, think about the people who are qualified, who really work their ass off, and they're like, well, I'm going to get this position. Sorry, you're not a woman. You can't get it. Compared to the women who do have these positions and had to go through a lot and get there, right? Are amazing. You have to bust your ass. Whether, again, you want to open up the environment, but I just don't know if that's the way to do it. I know that is not the way to do it because, maybe it's just me and I'm on and I don't know by myself here. I never look at anything. I don't care what race, color, whatever. It's if you could benefit the company, if you respect other people, if our intentions are, we want to treat our clients the best. That's what's going to get you hired. I never said, well, no, let's not, it's a woman or someone who's black or someone who's, whatever. And for her to come out and say that to me, that bothered me. And I looked at some presentations, and you're going to notice this going forward, because I just did show you guys about Barrick when I was covering gold in the intro. And also Newmont, both of them in the 3rd page of their latest presentation, their quarterly presentation, talked about diversity and how they have women working there. And it just, for me, it's kind of amazing. I don't like that. I think it puts women down. And I have to tell you, just hiring women, it's incredible. I love the chip on the shoulder. They work incredibly hard. It's just, I don't know. To me, this really pissed me off. I know it's going to sound bad to some people, but as a person who has 2 daughters, a person who has more women working for my company than ever, the 2nd biggest position, we also have 2 other directors who are women. They're just the best for the position. That's how I always looked at it. I don't know. Am I out of line here?
Yeah, absolutely. Headline is Frank hates women. Moving on.
Oh, that would be
all the
if this goes out.
All those details you just informed us about, how many people and percentages and all that. That's irrelevant. Mm-hmm. Yeah, it's listen. it's scary because the movement to bring everybody together in a negative sense on equal grounds and equal opportunity and equal outcomes and equal everything else is terrible. And it's just going to make people more and more miserable. And yeah, the people that supposedly sit on top of the mountain and claim that they're for diversity and all that are the exact opposites, and their actions prove that. I think it's ridiculous. I mean, and it's hilarious. It shows you how stupid it is in the world because, and not that you did it on purpose, you're doing it from an analyst perspective, saying, "Hey, here's some stats to back that up." But it's sad that you have to defend yourself. You have to say, "Well, I've worked for women. I work with because that's the way people are going to listen and come across as, oh well, Frank, they're just trying to help women and the workforce and all that. You get the glass ceiling and all that, and of course, there's bad situations that happen. But mandating it across the board like that, no, it's ridiculous. Of course it is. We need to get back to individualism and results versus this whole paint with a broad brush thing, and you must jump through this hoop to get there.
No, I definitely agree, and we'll move on from that topic because there's a couple other things like the whole Bitcoin craze.
Ooh, yeah.
I mean,
I got a text from a friend about that today. So Bitcoin's doing well when you hear from randoms.
It pisses me off that, I interviewed Tom Lee a few months ago. What month was that again, Daniel? When I interviewed
into April, I think he came on.
In April, okay, and we had a great conversation. It was pretty cool. And then all of a sudden, I said, "Do you have a forecast of Bitcoin?" Because I know that before that he threw out a 25,000 price target, and I know it came down to 8,500, and it was on its way to 8,500. I think it went a little bit lower. But he got pissed off at me. He said, "I don't do forecasts for crypto, so there's nothing." And I was like, "Well, I'm not just pulling this out of thin air. I didn't mean anything by it. I was just like, hey, what do you think?" Because he has been making forecasts like crazy. And he came out. He's like, basically, I don't do forecasts for crypto. And he was kind of like, I won't say the D word, but that's what he was. And I was just like, all right, fine, cool. He's like, I don't do price targets or whatever. But now, you see on TV where so many people do price targets, right? And they're getting back to it. Why? Because that's how you get on TV. So when you see a group, you don't get on TV by saying, "Oh, it's going to go to 25,000 by in a couple of months when it's 20,000." You don't get on TV for that. I know. I've been through the whole freaking thing. The more crazy crap you say, that's how you get. Nobody wants to watch TV or watch anything that's not exciting. They don't want to watch a guy saying, "Hey, this is what you have to do. You have to put all your money into income stocks, and in 40 years from now, after compounding, you're going to make an absolute fortune." Nobody wants to hear that ever. They want to hear, especially, and I know that from doing this and reading tens of thousands and 100,000 emails over the past 20 years. Frank, what's that one stock? That one stock didn't go up 80 times or whatever. I don't care. I'll lose all my money. That's what they want. They want the excitement. There's a reason why people go to see movies like Armageddon, even though it's ridiculous, because it's exciting. But this is your money, right? This is different. This isn't about being entertained. This is more about supporting your family, making sure that you can pay for your kids' colleges, and just seeing so many people go on and throw out a 300,000. This is next year, 2021, Citigroup, 300,000 price target. Again, it's wherever, 1920 today. I don't know where it is right now, but yeah. And this is by year end 2021. Why not say 50,000? Why not say 70,000? Like 300,000. And he's like, it's based on technicals. How are you looking at technicals? We've never been here before. What are you looking at? There's not like another level that you compare it to. Or, okay, we break out, let's see some consolidation. And then the report says based on technicals, and he starts citing like 1970 gold standard of the reasons why Bitcoin's great. So just reading it, and he's contradicting himself, saying, for me, I think that's a bad thing for the industry. But it's just funny because I see this happen all the time, and it bothers the hell out of me, is when when it's a bull market in an industry, everyone jumps on board at the wrong time. I love Bitcoin. I think it's going a lot higher. I just think it could consolidate and pull back a little bit. But the forecasts always come, and they come ridiculous when you're either at the top or the bottom. The bottom, if you look at the perma bears, I could name 20 guys, right? When the market crashed and went to the S&P 500 was 666 was the low. The perma bulls, perma bears, who said the market was going to crash. All right, you're right. What did they do? They got on and said, it's going to 300. It's going to 200. Like, stop buying a cave.
Well, it's hard to change your mind, man. I gotta even admit that. And I know you're not saying it isn't, but yeah. Hey, speaking of price predictions, when's the last time you heard a good one on gold that wasn't your typical gold bug for the last 30 years? Whatever happened to making price predictions for gold? We need to get back to that. Have
You know
some
what?
fun.
Because I mean, you've seen the bull market in gold. There are some people that were saying, 5,000 and 10,000 gold by a certain time. I mean, if you go back in 2011, you look at those forecasts. That's where the last bull market is. This is what I'm talking about. Go Google it. Go Google it. Say, gold forecast 2011, and you'll see 50 names. All the gold bugs pop up.
Yeah.
5,000, 10,000, 20, they disappear. They're not there anymore.
Yeah.
This is a point I want to make to you because this is stuff that no one else is going to tell you. You got to be careful who you listen to out there. I mean, these people, they have stake in the game. They have things going on behind the scenes that you don't know. They want to bring attention to their position because they're going to make more money, and they're not going to tell you when they're going to sell it. They don't have to. If they're a fund manager, you have to list it every quarter if you have over 100 million assets. But that's how you should always look at it. Even for people, either watching this on Curzio YouTube or watching us stay and listen to us, question everything. Question all of our research. Send out emails. That's how everybody gets educated. That's what we're supposed to do. It's America is founded on, right? We just challenge each other. But it's amazing when these forecasts only come at when you're absolute top or you're really, really at the bottom. And they tend to be wrong when they're right. And with Bitcoin, it's just with everyone. Could you find? Let me ask you this, Daniel. Could you find any forecast right now saying that Bitcoin is going to crash?
Ooh, I'm sure one of the diehard gold bugs would have to say that, I'm sure. Yeah.
But you're not seeing
I haven't
it
seen
right
it,
now.
no, but it hasn't come
I
across
saw it
the
like
array
crazy when
of
it went
screens that I do. No, you're right.
I saw it like crazy when it went to 4,000.
Yeah.
5,000. I saw it like crazy when it went from, 19 to 4 to 5.4. Heard it, Bitcoin's going to 0, right?
Well, not only does everybody make mistakes, and it's damn hard to admit when you're wrong, it's really hard to. So let's say you were anti-Bitcoin because you didn't believe in it. You didn't think that it was trusted on the algorithm. You don't believe that there's a fixed number of supply in 21 million after they're all mined. Those are all valid questions. Like you said, I mean, there's nothing wrong with questioning all that. Now, here we are again at basically $20,000. And the reason it's getting more and more hard to say that this is a flash in the pan and or a Ponzi scheme and or not going to stick around is because now you have multi-billion-dollar firms moving into it in a massive way. And forget Square and forget PayPal that makes it really easy to millions, if not hundreds of millions of people to basically, it's as easy to buy that as something online on Amazon. But now you have Guggenheim, I think Alan Bernstein, or I'm going to butcher that too. And then did you see BlackRock, what they said about it?
No.
What is it, Larry?
Mm-hmm. Larry Fink.
Yeah. CEO's world's largest asset manager says Bitcoin can possibly, quote, evolve into a global asset. So the argument of it, hey, this is going to 0, this is silly, I think is damn hard to even come up with. But if you still got that, more power to you. I just don't understand why people get so upset over Bitcoin and gold. And I know you started a good argument on Twitter about that. And I got to admit, I read that with a big grin. The only way it'd be better if I had a cocktail while I was reading through those comments, because I don't understand why it has to be one or the other, No,
I don't get it either. And I just punched this up for Larry Fink and BlackRock, saying that, Bitcoin could be a big deal, what you said, and I'll show this picture right here. If you're looking, the assets under management for them, 7.4.
Yeah, I knew it was over a trillion.
7.4 trillion they have. So if they put a 0.25% of that in Bitcoin, you would see it, I don't know. You could figure out and do the math, but
now that's one way they move funds. Let me get crazy here for a moment and go down a rabbit hole, because the Wall Street Journal reported earlier this year, I think it was January 14th, 2020, BlackRock, again, trillions under management. They said they would take a tougher stance against corporations that aren't providing full accounting of environmental risks. So you've heard this ESG, environmental, social. Mm-hmm. What's the last one? Whatever. It's bullshit is what it is, people. Just look out for that. In fact, I was talking to Frank the other day. I was doing some screens, and I'm on this packaging thing with everything going around. And so look at packaging companies and all that kind of stuff. And anytime they highlight in their presentation and or conference call about how, this is better for the environment and all that, that's going to become a bull market if it's not already. Because you got guys like BlackRock. Think about that. If you run somebody else's money, you're going to make the decision whether to invest in this company or not, depending on the environmental standards that I know science has already, fixed it. We're ruining the earth and all that other BS. But it just shows you the power that these asset managers can have. So you move into Bitcoin, that could easily double Bitcoin if $1 trillion under management decides to get in. You want to ruin another company because you don't want to invest in their funds, because you don't provide liquidity or give any of your customers under the 7 trillion access to that investment because they, quote, don't meet certain standards. That's powerful stuff. And that's why everybody needs to pay attention and put yourself at numero uno and try to figure out how to separate yourself from the herd.
Well, I mean, just to add to that, you're looking at PayPal where this is October, right? When they came in and said that they're going to support Bitcoin, Ethereum, and Litecoin, access to 400 million plus people now, right?
Yeah.
Now you're finding another outlet with Square and all these other, it's not hard to buy Bitcoin. Anyone can buy it. Coinbase is very easy too. So you just, like you said, it's more and more people are getting in it. And again, it's digital assets. The whole world is digital, right? The whole entire world is digital. I mean, we're seeing how digital is and how amazing it is based just with the pandemic. I mean, how all the businesses most businesses are operating, again, at a lower capacity, but even, restaurants adapted and pickup and stuff like that. More people picking up, and you make sure they have apps now for smaller companies, or they can order ahead of time and not just on the phone. So you see the adaptation, especially when it's forced on you, which we're seeing now with the pandemic. But for Wall Street and banking and all that not to be digital, not to be, you're not seeing tokenization where all these assets, trillions and trillions in assets in real estate and the bond industry could be tokenized, or selling off a small piece like you do with a stock where individual investors could own it. It really is very, 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 very early in this trend. Like not even in the first inning, but it's just, you could see it. You could see the path. Like it just makes sense. I think that's why people are getting it, saying, listen, we understand. And not only that, the uncertainty, this is what my opening was, Daniel, is the uncertainty that we're seeing, whether it's the election, whether it's, you can't get a stimulus out, interest rates going to be low forever, bailouts, unlimited bailouts forever for everyone. There's no accountability. That goes right to the heart of gold and Bitcoin, because that's where people say, okay, we don't like this system. We don't trust anybody. And we know we could trust this. And blockchain, the more people are on the blockchain, it makes it even more secure. But we'll go from there. So
Frank's going to have to reel me in because I'm getting way too bullish on gold. And as an analyst and what we do for a living, we get to look at this stuff all day. That's exciting. And you don't want to get over your skis. You want to practice position sizing and stuff. But I just want to take all future bonuses and buy call options right now because it's so funny to see everything going on. Just like you said, the argument for Bitcoin and gold is only building. And yet, especially in gold, we saw a quick pullback from 2,000 to 1,800 and a lot of gold stocks dropped 10% or more. That, as an investor, it sucks to see and stomach when you're losing money, or if your positions are big winners and go to small winners or haven't been turned into losses. But that's the exact thesis and opportunity you want to see when everything that your argument is building and the price goes against you in the short term. That's a wonderful time. So we're still in the early stages, and gold and Bitcoin both could be severely higher. And I don't see, as long as your time frame is good. My friends hate this because this is a political answer. If you're going to buy Bitcoin today, I would only recommend you buy Bitcoin if you're willing to buy it again in the future at some point. And I don't give a damn if that's higher or lower. But if you're just thinking I'm going to put $1,000 or $10,000 or more in Bitcoin right now and see where that leads me, I think that's goofy. Go to Vegas, you'll have more fun and a better story. Yeah. But if you're willing to put $2,000 in now, and if it drops in half, put $2 more grand in. Mm-hmm. I mean, unless your thesis changes where this thing is going away, that's how I would approach that. And that's what you got to do to manage your emotions. Because if you like it now and you're texting or asking anybody about it, if it drops below 15 or 12, you better as hell like it more. So.
Yeah, I mean, it makes sense. So the only threat to Bitcoin would probably be another digital currency, right? Something that's easier. I mean, it's Bitcoin, I've studied, it does have flaws, right? The transactions are much faster. You have cheaper in some areas, but it's still digital. So if it's not Bitcoin, it'll be something else. Right now it is Bitcoin, and it probably is going to be Bitcoin since, everybody's familiar with it. It accounts for 62% of the total crypto market.
Crypto market cap.
So it's 62. It was 80% like in early 2017. Now it's 62%. So, it's lower, but you're seeing more of these tokens really, some of them. I analyzed them to death in crypto intelligence. And I told you guys that 90% are complete garbage and fraudulent. And, you're not going to you don't get equity stake in these things, right? It's, the utility function. That's what it's based on. And these guys don't even have a utility. They don't even have anything going on. So, but with that said, inside that 10%, there are some names that are very, very interesting, and you're really starting to see them take off. And we'll see. I think Bitcoin, Ethereum's doing well. I loved Ethereum for a long time because that's where you get all smart contracts from. But I've had some really smart people in crypto that I respect tell me, be very, very careful with Ethereum. It's got a lot of flaws. So we'll see how this industry plays out. But if you're looking at the industry as a whole, when it comes to digital assets, it just really makes sense. And I guess the last thing, I don't know if you covered everything, right? I mean, I love when you go into politics. You go into politics, yeah. You always get the best emails. That's why I like talking politics with you. When you said, when it comes to politics and not talking about, it's not that I don't think people should talk about it. It's that during family time, there's going to be an argument if you have two different sides. Because
absolutely.
The way it is right now, the way we have it right now is, a Republican isn't allowed to like a Democrat. Democrat isn't allowed to like Republican. It's been more further apart ever in our history than is right now. Especially, I mean,
our lifetimes. Let's not go down that road.
I mean, you could probably find a couple periods, but on this scale where, I mean, there's a lot of hate out there.
Oh, yeah.
It's amazing because you could hang out with these people for basketball and everything's fine. And then once they get to political opinions, you want to, especially in social media. Holy cow. I love social media, man. It's just, it's just a complete shit show on social media. Anyone says whatever.
How many relationships you think have ended over politics in the last 4 years?
Oh man, a lot.
I bet it is. I guess we're laughing at people's sadness. That's not nice of us, Frank. But
absolutely, a lot. Which is a shame, because most of us all have the same goals and want our family to get better, and want to make money for ourselves and provide a family with a great living and stuff. We all have like 90% in common, pretty much. And then, but yet you just throw this in there, and it's just, I don't know. It's almost like road rage. Right?
Yeah.
Why do you have road rage for? Who knows? But people just lose it when they drive traffic. You can't control it. They just go crazy. Anyway, last thing I want to talk about, Dan, before we go here is Airbnb. So Airbnb is coming out with their IPO. And for me, I mean, I just thought it was kind of amazing that I did some numbers on it. And I posted this on my Twitter, friend Curzio. Airbnb, first 9 months, 2019, sales were $3.7 billion. Net loss, $322 million, par for the course for IPOs these days. Valuation based on that latest investor round, which was February, $18 billion. Now, let me ask you a question, Dale. Do you think Airbnb would be in a better position today after the pandemic, with the pandemic still going on, or pre-pandemic?
Yeah, I would have to go pre-pandemic when everything was,
makes sense, right?
Well, that was our normal, as we're going to refer to it for the rest of our lives.
Has a great business model. I get it. I understand. Airbnb, first 9 months of 2020, sales down 32%. Net loss increased 116%, almost $700 million loss. Their valuation that they're pitching for their IPO, again, last time in February, pre-COVID, $18 billion. $30 to $35 billion are going to come out at. Crazy world we live in, right? And you know what? It's probably going to go a lot higher, and it's going to be a $75 billion valuation 6 months from now. We're in a market, I guess, where numbers don't matter, and it is frustrating, but you could get frustrated and get pissed off, or you could learn to adapt, right?
Yeah, absolutely. The interesting thing I haven't dug into Airbnb a whole lot, but one of the main things that sticks out to me is that, have you ever stayed in Airbnb? I have not.
I've stayed once, yeah.
How was the experience? Was it good?
It was good. Yeah, for me, it was
quickly. I mean, logging on, easy connections. You're not worried about. You're not worried about like Craigslist. Like, oh man, if I'm going to get screwed, like, if you buy golf tickets or golf passes or any sporting thing, there's always a level of nervousness and saying, hey, the other end of this better be the guy I'm thinking or the girl I'm thinking, all that. So I've never stayed in Airbnb. I know a lot of people that have, and the vast majority, I'd say well over 90% are positive. The thing that stuck out to me on that is, and I'm not saying I'm right here. I could have been wrong on my initial thought. But what was so interesting to me is when I always thought Airbnb, I thought of going elsewhere. I would think, all right, let's go to Arizona, rent a house, play golf all week, or let's go to the beach, hang out, either with a big family or a couple of families meeting there. And again, I'd never done it. Not, I'm more of a hotel guy. Now, the crazy thing was I heard something and it just made me think out loud on Airbnb is a great flexible model in the sense of not about profitability yet. I'm not talking about that. I'm talking about you don't have to have people travel far to do the same damn thing. And that is really interesting to me because we don't have to go from here to Arizona or from here to Atlanta. Hell, you can go to Jacksonville and rent an Airbnb and have a staycation. So the crazy thing about that is that it wouldn't almost shock me if you get more people in an Airbnb because they just don't go as far. And that is a lot of it's just blind dumb luck, because they don't own a whole lot of assets. I don't even know if they own any. I know they're basically the platform like Uber. They don't own a bunch of cars, but they're the Uber platform for taxi services. But that is just, kind of to think outside the box and just kind of fall bass backwards into luck on that. Because again, you don't care how far people are traveling. You just want them to go have a getaway. And if you have a lot of stuff that's 40 minutes away and you don't have to fly very long, I think that's really interesting. So I'll be looking at that for those numbers. But the losses and all that, like you said, you don't have to make sense, and you might as well cash out while, we got trillions of liquidity being pumped in all the time. You can't blame those guys for that. That's incredible.
Yeah. I mean, it is a great business model. And not only that, it's like Uber where, people could use their own cars, right?
Yeah.
Of course, you got to go through a whole giant process, but now it's, hey, I have this room or I have this house, and now, you can make money on the side from it. So it does make sense. And you have reviews there and people have used it and stuff like that, just like, Uber and has, you could rate it and stuff like that. But for me, I'm just a hotel person. But yeah. Is it a good business model? It's great. Yeah, it's a great business model. That's why it's a $30 billion. That's why it's so big. I get it. But I'm surprised that, I guess the guys who paid $18 billion, that was based on the latest investment round. Good for them. They did good.
I was going to say, too bad we weren't in that offering. How do you like that? You're going from 18 to 35? Your lockup period's going to be what, 6 months?
Everyone always says that. It's just like the bottom, like in the credit crisis, or even, like the March lows. Man, if I would have bought, man, we should have just bought. But when you go through the emotions of that time, like in March,
absolutely, yeah.
Even me, we were well ahead of this, getting a lot of people out of the markets, because China was closed and no one was really focusing on that, even though it accounts 40% of the world's growth. Even through March and April, it took me a while, and I'm like, man, this looks bad. And markets started coming back, and into May, then they decided to hand out, $6.5 trillion out of their pocket. I was like, well, all right, if you nobody had that, I was like, you got to be bullish on the market then. I mean, all this money's coming into the market, 30% of GDP, of U.S. GDP, just handed to people, is going to result in and keeping rates super low. It's just every asset you're seeing across the board is just, flying higher. But Dan, I want to thank you for coming on. We covered a lot of subjects today. Love having you on, getting positive feedback. So guys, whenever you want, email me, frankcurzioresearch.com. We talk about a lot of controversial things too, in terms of politics sometimes. But again, a lot of that always comes back to your investment decisions. And we talk about politics today mostly because it is the reason why our political environment is what it is, and how you play it, and why people are so uncertain and don't trust it on both sides. I mean, you basically, it's Bitcoin and gold, right?
Yeah,
that's basically what it
is. Absolutely, yeah. And you got major tailwinds, so.
Yeah, absolutely major tailwinds. Central bank's going to spend forever, and so I appreciate you coming on, buddy. How's the back doing?
Wonderful. Hit a few golf balls on the range a couple days ago, and didn't play, but not in pain. I got up, walked around, felt good. So yeah, we'll be back at it soon.
Yeah, it's frustrating because when you're like,
Mother Nature's being a real mother right now here in North Florida, and it's like 30-some degrees this morning, which is cold for everybody here.
A week ago, it was like 83, 84 or something. I think that was close to a record. And now I don't know if we need a record low now, but it's got to be pretty close in the 30s.
I'm going to have to polish up on my global warming arguments then. Yeah. Jeez.
And it's so frustrating, too, playing golf with Daniel, because, he's so tall, and he just, he basically swings like 1 mile an hour and the ball goes like 5,000 yards. So I'm like, great, this is a confident booster for me. So anyway, but it's kind of funny. Perfect build for it, but yeah, it's good golf. So Dan, thanks for coming on, buddy. And we'll definitely,
enjoyed it as always. Everybody have a great week.
All right, man. So, all right, guys, that's it for us. Again, Curzio Research YouTube page. Take a look at it. I know I'm saying this a lot, but it's really cool because you'll be able to follow a lot of the stuff that we're doing. We're bringing up things on our screen. I can control it. We have the whole studio here. It's really, really cool. You can see both of us going back and forth in our expressions and things like that. But it definitely provides another element, and it's resulting in a lot more viewership and stuff. So it's really cool. And just go there, subscribe to the channels absolutely for free. I try to give you guys as much free stuff as possible, and that's why we have a lot of subscribers and more people coming in, because they get to see the quality of the research first and listen to us and listen to how we care about the markets, how we care about our customers, and it results in a lot of people not just subscribing to one product but many of our products, because they know we're looking out for them, and that's the goal here. No matter what you think about political opinions or whatever, we're always going to have differences, but there's there'll never be a difference where we put our customers first here. We want to educate you as much as we can, and we want to make you as much money as possible. So far it's been pretty good. It could always be better, but it's been really good over the past couple of years. So again, we're going to continue to stay ahead of the markets and try for you guys. And yeah, I just want to say thank you so much for listening, all your support. And I'll see you guys in 7 days. Take care.